Buying a home is one of the biggest financial decisions you'll ever make. And when it comes to choosing a mortgage, the type of loan you pick can have a major impact on your budget, your flexibility, and your long-term financial goals. Two of the most common loan options are FHA loans and conventional loans. On the surface, they might seem similar, both help you purchase a home, both require monthly payments, and both give you the keys to your new house. But the details make all the difference. Let's break it down step by step so you can understand which loan may be the best fit for you. What is an FHA loan? FHA stands for Federal Housing Administration. These loans are backed by the government and designed to help more people achieve the dream of homeownership, especially first-time buyers. The biggest benefit? Low down payments. With an FHA loan, you may only need to put down 3.5%, compared to the traditional 20% many buyers expect. That makes it much easier to get into a home, even if you haven't saved up for years. Another advantage is flexibility with credit. If your credit score isn't perfect, maybe you've had some bumps along the way, FHA loans are often more forgiving. That means you don't need to have spotless financial history to qualify. However, there's a trade-off. FHA loans require mortgage insurance premiums, both upfront and monthly. This adds to your overall cost of borrowing, and in many cases, those premiums stay for the life of the loan. What is a conventional loan? Conventional loans are not government-backed, they're offered through private lenders, banks, and credit unions. These loans typically reward borrowers who have strong credit and a stable financial profile. One big benefit of conventional loans is lower long-term costs. While the down payment may be higher, sometimes 5%, 10%, or 20%, you can avoid long-term mortgage insurance costs if you put at least 20% down. Even if you put down less, once your home equity reaches 20%, you can request to remove the insurance. Conventional loans also tend to have fewer restrictions when it comes to the type of property you're buying. They're often the better choice if you're planning to stay in your home for a long time and want to minimize your lifetime borrowing costs. So which loan is right for you? It depends on your unique situation. If you're a first-time buyer with limited savings and less than perfect credit, an FHA loan could be the stepping stone to homeownership. If you've built up strong credit, have steady income, and can afford a larger down payment, a conventional loan may save you money over the long term. Think of it this way, FHA helps open the door, while conventional may keep costs lower once you're inside. Common myths. Many buyers think they must have 20% down for a conventional loan. Not true, some conventional programs allow as little as 3% down if you qualify. On the other hand, some assume FHA is only for people with bad credit. Again, not true. Many first-time buyers with decent credit still choose FHA because of the low down payment and accessibility. Final thoughts. At Approvals on Demand, our job is to take the confusion out of this process. We don't believe in one-size-fits-all solutions. Instead, we review your full profile, your credit score, your savings, your income, and your long-term plans, and recommend the path that makes the most sense for you. House with garden. Whether it's FHA or conventional, the key is making an informed decision that supports your financial future. Backhand index pointing right. Visit approvalsondemand.com today to compare your options and take the first step toward buying your dream home with confidence.